Welcome to another exciting episode of Max Homes Real Estate. We are back.
You're back, yeah. So Max, what's up? What's going on?
Oh, Rinson, we thought winter was over. Spring is here. Spring break is also done.
Yeah.
Here gets a new set of snow.
Yeah.
I've been digging myself out
Yeah.
of the snow for the past 2 days.
Shoveling out. Yeah, we can't complain so much because we didn't get too much snow this season. So
I agree.
No complaints. Yeah.
I hope this is the last bunch, but I'm so excited to get to spring and get started and put the winter behind.
Yeah, that's right. Anyways, I think we should get into our business.
Yes, let's get started.
Yeah, okay. So we will go as usual. We will go in a structure, section by section. So our first section is with the major headlines or news for the last couple of weeks.
Yes.
So what are the news that we have?
So the big one is the inflation print.
Oh yeah. Right.
So the inflation print for February came to be 2.8, basically 0.1% reduction compared to Jan, which was 2.9.
Nice.
Which is a surprise to everybody,
Right.
including the BOCs, because everybody thought it's because interest rates are high. Everybody expected a higher inflation to go up.
Yeah.
So luckily, fingers crossed, we are still in the target range of 1% and 3%.
Yeah.
Which is something good news for everybody, including BOC.
Especially the back-to-back print.
Back-to-back print.
Within the target range of BOC, which is between 1 and 3, right?
Exactly. Mind you, the major factor causing the inflation high is the shelter cost and the gas. There was an uptick of gas price.
Yeah.
So those are the two major factors still causing the inflation, high.
Yeah, there's a lot of discussion going on out there. Like see the interest rate itself is a driving factor for the inflation.
All right.
And why does BOC calculate the interest rate or the shelter cost, which is nothing but the interest rate factored. Why they are calculating in their inflation prints. It's kind of a discussion out there, but we are not economists.
Yeah.
Yeah. Okay, so that's a good news. That's of course a good news for our economy.
Right.
So what do you think? What is that implies? Can we get a rate cut soon?
Hopefully. So our next BOC announcement is on April 10th.
Okay.
By April 10th, we will not get the inflation print for March.
That's right.
Yeah.
Yep.
After April 10th, the next BOC update is on June 5th.
Okay.
So June 5th is a key update because by June 5th, you should get an inflation print for March and April.
That's right.
And based on those 2 months inflation print, BOC will be making a decision on rate cuts.
Okay. Okay.
That's one thing. And if you look into the deliberations that the BOC had in the last couple of meetings,
Yeah.
they had some reasons. They say that the rate cuts are in cards for this year.
Okay, that's good news.
Yes.
Yeah, good news, everybody.
So typically they take three factors.
Yeah.
One is how the job market is performing.
That's right.
Secondly, inflation, obviously.
Oh yeah.
And then how our GDP is performing. So
right,
all these things they consider it and they speculate based on all these factors.
Yeah.
Whether we can expect a rate cut sooner or later. So
Okay.
definitely looks like we have rate cuts in
Coming,
cards.
right? Yeah.
But when is that going to
Yeah.
happen? They are
Still,
split.
yeah, still in the air.
Yes, yes.
But as you said, by June 5th, I think they get the data for 2 more months.
Yeah.
So of course, that would be a crucial data for the BOC to make a decision on where the interest rate would be.
Exactly.
Yeah.
Now, for the BOCs to cut the rates, they have a dependency on the US economy too.
Yeah, that's a good point actually.
Yes.
Yeah. So let's discuss on that.
Yes.
Yeah.
So if you see the inflation print on US, it actually went up by 0.1%. So it was at 3.1, now it's 3.2.
Oh, okay.
But still, the Fed said they're going to hold on the rates. And they also said that we can expect at least 3 rate cuts this year in the from Fed.
Okay. Okay.
So we have a dependency we can't cut rates while the Fed hold their rates because it will directly impact the dollar value.
Yeah, that's right. Yeah.
And our trade. So BOC is very sensitive with respect to cutting rates while the Fed keep the rates high. So we don't want much disturbance in the trade.
Yeah. So they can't go in opposite direction, right? I mean,
Correct.
yeah. So at some point of time, they have to, go in the same path. If it is going up or down.
Right.
Yeah. Okay. Okay. So that's good to know.
Yeah.
Anything else from headlines perspective?
I think those are the major ones.
Okay.
Impacting the real estate market directly. Yeah. Other than that, I think we can maybe move to the next section,
Yeah.
which
Okay.
is the
data section, right?
Yeah, weekly
okay.
data
Weekly
section.
data.
Yeah.
So for the month of March, I think the monthly data will be released next month. I mean next week,
Yeah.
like by the first week of April, I guess. So I think by our next video, I think we can discuss the monthly data from TRREB. But what we have in the weekly data.
Yeah.
What do we see? So Max, if you see that graph.
Yeah.
We do see a good jump in the active listings. So when we look at the data for the week of 10th March, that is I think 9th March, I'm sorry. So which is what we discussed in the previous video. The active listing was hovering around 13k 333. But if you look at the current active listing, it's 14k 573. There's a jump of around 1,000 active listings.
Exactly.
For the if you compare to the previous 2 weeks. So when you look at the sales, not the sales figure, the new listings, that is also being increased from 3,100 to 2,300. If you look for the data for the last week. Week ending 23rd March, and if you look at the sales data, it is still hovering around 1,500. So basically, what we see here is that we are getting new listings in the market, and we don't have that much sales going on, and the sales is hovering around the figure of 1,500, and that is basically pushing up the active listings in the market. So it is not the usual spring market that we see where the active listings increase, the sales increase, that is what we usually see in the market. But if you see in the data and the trend that we see here is that the active listings are going up, but at the same point of time sales are not picking up that so fast. So Max, we want to know from you, like what is actually happening in the market, in the ground reality. What do you see? Is it really can we really relate to the data that we see in our graph?
Absolutely. So if you see, it's a good thing for the buyers because there are more active listings coming in, new listings coming in.
Yeah.
That means the market is definitely balanced.
Okay.
And that means they have a better choice.
Yeah.
And that is exactly what I see in ground reality.
Okay.
One of the example, if I could point out, is we had a listing. It was listed out around 920k. And seller was hoping to get around 950.
Okay.
But what happened is they got about 40 showings, but they only had one offer registered, which was much less compared to what they are expecting.
Okay.
So there is traffic, there is more people, and the more buyers in the market, but they are not they are not willing to pay the amount that seller is expecting. I can't blame the buyers because the interest rate is high, their buying power is limited,
right,
and they are hoping that if interest rate is around the corner, interest rate cut is around the corner, they want to scoop the deal.
Yeah.
And that's why they are hoping the interest rate to cut, and they're also it's a spring market, they want to get and check out more houses and stuff like that. So there's traffic,
okay,
but sales is not happening much, and sellers are not getting what they really want.
Okay, exactly what we see in the data, right?
Exactly. And just to connect that with what BOC said is, they said that if they cut the rate, they are afraid that it will heat up the real estate market crazy.
Yeah.
So they are sensitive to that too.
Right.
And that's also one reason why they are still dragging their feet
Right.
holding the rates.
I think they don't want to repeat what exactly happened in 2023, in the beginning of 2023, right?
Yeah, right.
Okay. Okay, that's good to know. Thanks for that. And we can go to the next section, I think.
Yeah.
Which is nothing but the mortgage rates.
Yes.
So what do you see? Do you see any difference from the
So
last?
so last episode we covered the monthly view
Right.
of the mortgage.
Yeah.
So now we are capturing bi-weekly.
Okay.
Weekly data, but we are presenting it bi-weekly now. So basically for the month of March, there hasn't been any change from what has been reported in March, early March,
Okay.
to this week of
Until
March.
now. Okay.
So the prime rate is at 7.2, and if you look at the popular terms, 5-year fixed, 5-year variable, 1-year fixed, and 3-year fixed, we are looking at 4.99 and 4.99 for both insured and insurable mortgage. And for uninsurable, we are uninsured, we are actually at 5.44
Okay.
for 5-year fixed.
Okay.
And if you look at the variable, 5-year variable, we are prime minus 9.5 for both insured and insurable. And for uninsured, it is at prime minus 0.45.
Okay.
For 1-year fixed, we are at 6.59 for insured and 6.93 for insurable and uninsurable.
Okay.
And 3-year fixed, we are at 5.9 for insured,
09. Yeah.
5.09 for insured,
Right.
and 5.49 for both insurable and uninsured.
Insurable. Okay.
Yeah.
Okay. So basically, it's the same rates that we had seen in the last video as well, right?
Correct.
Okay.
Yeah. But we are reading that bond yields are coming down, so we can maybe expect
Some change.
some change in the fixed
rates.
fixed
right?
rates.
Okay.
That's something hopefully in the next week we'll see.
Okay. Let's continue to
sheets.
track them.
Yes.
We will post it here. If we see some changes for sure, in the next video we will track it for sure.
Yes.
Okay. So yeah, I think that's what pretty much we wanted to cover. Max, anything else that you really want to
Just talking about more listings coming and not a lot of sales going. Just wanted to tell you that overall GTA it's a balanced market, but then if you take the local markets,
Yeah.
and you do the data where what are the number of new listings to sales ratio, it could be a seller's market, it could be buyer's market, it could be balanced market.
Okay, it may vary, right?
Yeah, it can vary, but typically across GTA currently we are at a balanced market.
Okay, okay, good to know. So if if you have any questions, or if you really want to know the data for a specific market or specific pocket, please reach out to Max. He will obviously gonna help you.
Happy to help.
Yeah. Okay, so that's good. I think we can wrap it off if you don't have anything else. So thanks a lot for your feedbacks, for your support. Please continue to watch, and if you like the videos, and share it with your family and friends.
Yes.
And subscribe the channel. So
yeah, if you have any questions, let us know. I'm happy to help.
Yep.
And you have a great week ahead,
Right.
and hope to see you soon again.
Yeah.
And this is Max Thomas.
This is Rinson Matthews. Stay
Stay
safe.
safe.